Thank you, Madam Chair. The time is 4 o'clock. You may begin when you're ready.
Thank you. Good afternoon, ladies and gentlemen. I'd like to extend a warm welcome to everyone who has joined our meeting. This is Nonkululeko Nyembezi, Chairman of the JSE. I'm joined on the podium by our Group Chief Executive Officer, Leila Farid. Other members of our board are also online and on camera, with the chairman of the various board committees on hand to answer any questions you may have during the course of the AGM. We do also have several guests joining us today, particularly from the media, and I'd like to welcome you as well. This is the 17th annual general meeting of shareholders of JSE Limited. I've had the privilege of chairing 8 of those meetings but now this is my final stint in the chair. This AGM is the third that we are conducting virtually. The virtual meeting platforms that we use for these engagements have certainly improved over the past couple of years and are now proving quite successful in facilitating an effective engagement. When we considered how best to engage with shareholders, our decision was shaped by the need to afford all shareholders, wherever they may be located, an opportunity to engage with the company and the board. For this reason, we have provisioned both voice and text facilities within this Zoom platform. I trust this will support an effective engagement with you all today. At our last AGM last year, I reflected on the formidable challenges for our communities, our economy, our country, and our company as a consequence of the COVID pandemic. While much progress has been made in blunting the dreadful impact of the virus, we now face new global challenges arising from the invasion of Ukraine by Russia, with disruptions to supply chains and food security, accelerating inflation, volatile markets, not to mention enormous deprivation to millions of innocent Ukrainian citizens directly impacted by the fighting. While we cannot influence global geopolitical events, we can ensure that our business is well positioned for growth, whilst protecting and strengthening our core business and enhancing our resilience as an operator of financial markets in South Africa. We operate in an era of disruption. Technological and behavioral changes continually disrupt traditional stock exchange business lines. This underlines the need for revenue diversification at a faster and more responsive pace. I'm particularly pleased to reflect on our efforts in this area over the past 2 years and sure that Leila will continue to focus on accelerating the growth strategy. Let me turn now to governance matters. Board continuity and renewal is a responsibility that we take seriously and forms part of our ongoing governance program rather than just a once-off exercise. Each year since 2015, we've made appointments to the board with a view to achieving an appropriate balance of knowledge, skills, experience, diversity, and independence. As you know, we announced Phuthuma Nhlego's appointment in May 2021 as chairman-elect, and he joined the board in July 2021. This long lead-in has given him an appreciation of the business and the JSE strategy, as well as board dynamics. The board and I are confident that Phuthuma will bring his excellent skills and deep experience to the role and will provide new impetus and energy to the organization's growth endeavors. I have served on this board for 12 years. My involvement stretches back to the acquisition by the JSE of the Bond Exchange of South Africa, just as the JSE was emerging, or the country, not just the JSE, from the global financial crisis. So much has changed in both global and local capital markets during this time, and I must confess it's been a thoroughly enjoyable and rewarding journey, not to mention highly challenging at times. In any organization, it is the leaders and staff, their passion, ingenuity, efforts, grit that shape the life and success of the organization. During my time on the board, I have worked with 3 exceptional and very different group chief executive officers. Russell Loksha played a crucial role in laying the strategic foundation for the exchange, including spearheading the JSE's listing in 2006. Nikki Newton-King modernized the JSE by overseeing the implementation of major projects, including T+3 and the implementation of the integrated trading and clearing software that you will continually hear the team refer to as ITAC. Leila is now leading the JSE's diversification strategy to take the business into the future, into what I think of as utterly uncharted waters. I'd like to acknowledge their efforts and service and that of the leadership teams and staff. It's your commitment that has made the JSE the special institution that it is and will continue to do so. And on that note, I'd like to turn to the administrative formalities of this agenda. Starting with the agenda, our agenda for this virtual meeting is reflected on the screen now. I trust you can all see it. We'll return to it as the meeting unfolds. You can also access a copy of the agenda, the AGM notice, and other materials on the JSE website. Once we have dealt with admin matters, I will present our financial statements and reports as required in terms of the Companies Act, and we'll then take questions from shareholders on the AGM resolutions only. Voting on these AGM resolutions will then follow, and our scrutineers will present the outcome of the voting. To conclude the meeting, Leila will present a brief business update and take questions from shareholders and visitors in an open Q&A on any topic, whether she's touched on it or not. In terms of the etiquette of this meeting, I'm sure absolutely everybody is familiar by now with navigating Zoom meetings, but perhaps a few words on meeting etiquette would still be helpful. This AGM is being conducted virtually via electronic participation only, as provided for by the Companies Act of 2008, the JSE listings requirements, and the JSE's Memorandum of Incorporation. Throughout the meeting, relevant information will be presented on screen. There are 3 ways to ask questions during the meeting. Firstly, you may address the meeting directly. Please click the raise your hand icon. Once you've been identified by our meeting convener, your microphone will be unmuted and you'll be able to ask your question and engage with the JSE board members. Alternatively, you may wish to submit your questions or comment via the chat box using the Q&A icon at the bottom of your screen. Please type your name, organization, and question, and then click send. Your question will be published and read out loud and answered during the course of the meeting. As a third alternative, you can email your questions to our investor relations team at JSE Group agm@jse.co.za. In order for an efficient and effective meeting, I would ask that questions be raised during the two Q&A sessions, the first one being for shareholders only, to ask questions relating specifically to the resolutions being put forward at this AGM before these are put to a vote. The second open Q&A session is for any questions from meeting participants, including our visitors and the media, relating to the business and operations of the JSE. Please note that only shareholders reflected in the share register and in possession of the necessary letter of representation or a person holding a valid proxy which has been filed as required are entitled to speak and vote at this meeting. Visitors and guests are welcome to pose questions in the open Q&A session, as I already mentioned. For the notice convening this AGM, including the agenda, was posted to the shareholders on 29 March 2022 in compliance with the prescribed period for a notice of meeting. We also provide a free service to shareholders of JSE Limited. All company communications, including the AGM materials, are available at ShareHub, our electronic portal. If you haven't yet registered on this portal, you can access ShareHub at sharehub.coza. I propose that the notice of AGM and the agenda be taken as read. Shareholders represented here today may wish to propose additional items for inclusion on the agenda. If so, I invite you now to raise your hand and address the meeting if you would like to propose any additional items. I am advised, I beg your pardon?
No raised hands, Madam Chair.
I am advised that there are no raised hands, and therefore I will move on to deal with the quorum. The quorum requirements for this meeting are that at least 3 members are entitled to vote, are present in person or represented either by proxy or letter of representation. And in terms of the Companies Act 2008, that at least 25% of shares in issue are represented. I confirm that a quorum of shareholders is present or represented at this meeting, and I accordingly declare the meeting properly constituted. The JSE has appointed the meeting specialist Pty Limited, and specifically Mr. Easy Fanschool, as the scrutineer to manage the poll and ensure all votes are correctly recorded. Our external auditors, E&Y, are also in attendance to exercise oversight. Members of the JSE board are in attendance today, as I said earlier, including the chairman of all the various board committees. I will ask them to assist in answering any shareholder questions as needed. Dr. Suresh Khanna, our lead independent director and the chairman of the Group Audit Committee and the Group Sustainability Committee. Nolita Fagude chairs our Group Remuneration Committee. Dr. Manziga Majwane, chairman of the Group Risk Management Committee. Zarina Basa, chairman of our Group SRO Oversight Committee. And finally, Ben Kruger, chairman of the Group Investment Committee. I will now move along to the next item on our agenda, which is the presentation of financial statements and reports. The required documentation for this meeting has been in your hands for some time now. This includes the audited, consolidated annual financial statements for the year ended 31 December 2021, including the Director's Report, our Group Audit Committee's report, and the Independent Auditor's Report. Our Integrated Annual Report for the 2021 financial year, and our Remuneration Report and Sustainability Report also for the same financial year. These reports are comprehensive and address the various activities of the group for the 2021 year. I hereby present these reports to the meeting and will take them as read. These reports are non-voting items except for the Remuneration Report, which is subject to an advisory vote later on in the meeting. We will now move on to the first Q&A session for today. Shareholders may wish to raise questions on any of the proposed AGM resolutions. Please remember to identify yourself as a shareholder and your organization when posing a question. You may raise your hand now to address the meeting or submit your questions via the chat box. Let's take 3 questions to start off with.
Thank you, Madam Chair. We have a raised hand from Mr. Logan. Mr. Logan, if you could proceed.
Welcome, Chris. You may be on mute.
Mr. Logan, if you could unmute, please.
Hello.
Yes, sir,
Hello.
we hear you.
Oh, thanks very much. And thanks very much, Madam Chair. And if I may ask some questions, but before doing so, I'd just like to commend you and the JSE on the pertinent comment in your integrated annual report, and more generally in the excellent way you've engaged throughout the year. You've set a high bar. My first question deals with something which has a material impact on the JSE and the economy more generally, and it's received a lot of coverage over this last year. It's the general listings, delistings environment in South Africa. As we know, well-functioning exchanges enable economic growth by facilitating the mobilization of financial resources. And new listings also serve as a flywheel, driving higher growth in trading and other business. Our CEO in the integrated annual report states attracting new listings is one of the key objectives of my team. New entrants improve the diversity of opportunity for investors, ensures the exchange adds value to more of the economy, and they improve the exchange resilience. Despite all of this and what the JSE termed the stellar performance in 2021 of the global IPO market, the JSE is in its 7th consecutive year of net delistings, with the delistings pace accelerating. It's clear there's a lot more than just red tape behind our shrinking market, and you yourself state significant policy reforms and a step change in economic growth remain the most potent tools to grow the market. Mindful of all of the above, can you please advise whether the JSE is doing enough to promote how exchanges enable economic growth and development? There was a great article in the recent Sunday Times where our CEO, spelled out some of the JSE's initiatives, but it's certainly not at the level of an exchange like NASDAQ, where they champion that their purpose, where they trumpet that their purpose is to champion inclusive growth and prosperity. That would be my first question. My second question would be, what significant policy reforms will be the most potent tool to grow the market? And there I'm drawing directly from what you stated in the annual report. And then thirdly, whether the JSE has a view on the very well publicized work of Mr. Paul Miller, which is premised on the idea that our public capital markets have a structural problem, and that the big institutions which dominate the market, by and large, only invest in the largest 80 to 120 listings. And I think this has had a huge impact. We see it all the time. New companies cannot get financed, and it's worse than that. Existing companies just go to very poor ratings and eventually just delist. Those are my three first questions. Thanks very much, Mr. Chair.
Thank you very much, Chris, and thank you for your kind words recognizing our efforts. I am happy to take one more, given we've got three from Chris, we may take one more shareholder question.
Madam Chair, at this time, we have no more raised hands and no written questions.
All right, so we will address Chris's questions right now, but I am going to just remind shareholders that we will have an open Q&A at the end of the governance section. For now, we are encouraging you to ask questions related to the resolutions presented at the meeting. However, that said, let's go ahead and tackle the three that have been raised. I'll get Leila to weigh in on all of them, but I just want to reflect on the delistings because that's been obviously excising our minds quite a lot in the last few years, but particularly in the last year as part of our board conversation. So I'm going to say, firstly, that delistings from public markets is a global phenomenon. It is not unique to the JSE by any stretch of the imagination. The only exception is technology-related listings. You mentioned NASDAQ. They have certainly been a clear standout winner in that. Some of the Chinese exchanges as well, given the level of tech companies that are active in those markets. So the JSE's failure to attract new listings in tech actually has a very, very telling impact on, we've got delistings, they've always happened, but we are not attracting net new listings. So that is a very critical one to bear in mind. Now, it's not that South Africa is bereft of technology companies starting up, growing, and needing capital. It is a second factor in this cocktail of factors that we're contending with. It is a matter of record that private capital is highly, highly available the world over, but in particular, South Africa private capital growth has just been explosive. And so a lot of entrepreneurs go that route and find sufficient support from investors on that route. Clearly, the more there's disclosure, the more there's compliance requirements, the more there's any number of matters of compliance nature that have to be addressed and complied with in being in a lit market, the more people will be driven towards private markets. But I think it's also true that for tech entrepreneurs, also the risk or the danger of losing control over their companies is something they take very seriously in not wanting to come to public markets. So I think that when we start to see a much, much bigger effort on the tech scene in South Africa, we are not likely to see a really big shift in the trend that we're seeing. You did cite actually some of the factors, and I certainly agree with the paper that you referenced, because it tried to look at the multiplicity of factors and not just go this narrow frame that says the JSE trading fee is too expensive, people don't want to list, because that is really misunderstanding the issue. The issue is far more complex than that. What are we doing to address that? That is what Leila dreams about and thinks about and tries to do every day. So we are going to ask Leila to come in at this stage.
Thank you, Chair, and thank you, Chris, for your questions and your very generous comments at the outset. And indeed, this is a multi-year, in fact, over more than a decade's trend that we've seen. And Koo mentioned a couple of the exchanges. So those exchanges that are doing well are Hong Kong, Euronext, and NASDAQ. The JSE probably is somewhere in the middle. Exchanges like Luxembourg is down 55% over the last 10 years. Deutsche Börse is down 36% in number of listings. Swiss Stock Exchange down 22%, and LSE Group down 21%. Of course, the JSE is sitting at minus 18%. So certainly this is something that both the board and the JSE, together with all of the market participants, are applying our minds to. There are a couple of areas that we're looking at. Of course, red tape and ensuring appropriate governance, appropriate at the time, is the first area we're focusing on. We are, as you would have seen by the article that you mentioned in the Sunday Times, we have launched a private market a month ago, which has more than 5 billion rand in investor capital, and we've had our first issuance on that market. And then we are collaborating with market participants to build flows into the country. So I'll start with the red tape. We will be issuing in the next couple of months, a couple of weeks, a paper to relook the governance levels. That will deal with things like the removal of auditor accreditation, expansion of the REIT offering, simplification of financial disclosures, We've introduced actively managed certificates, and we are in the process of introducing actively managed ETFs and funds. We are also undertaking a secondary listings framework review. In addition to that, we are looking at reconsidering the 20% public spread requirements, which we think will have a positive impact, and potentially even contemplating more structural changes such as the establishment of a tech board or expanding the DR offering into Africa and simplifying the listings requirements generally. That said, we can't underestimate the importance of the broader macroeconomic environment. We are engaging with policymakers on policy, ranging from exchange control to potential contemplation of tax rebates around the SME market. The small, when I say SME, I mean, sorry, the small and mid-cap market. As everybody knows, we run a number of very important road shows with the president and various of the key ministers, together with top listed entities, to present South Africa as an investment destination. For the first quarter of the year, we are incredibly pleased to see inbound flows into the market from foreigners. For the last 3 years, we've had systematic outflows, and we believe that that will contribute to the diversification of the investor market. So, Chris, you spoke about the structural construct of the market, and most certainly our market is largely an institutional market. We don't have deep penetration of retail customers, and as a result of that, there tends to be a very strong focus in the top 40. And those less liquid counters receive far less trading interaction, and particularly so during a downturn. So this is a topic that is not new. It's the press have covered quite extensively over the past sort of 6 months. But it's actually a 10-year dynamic that we've been facing into, and this is a global market dynamic. And we do believe that our private placement platform will go a long way to start to address some of these dynamics that are at play, particularly in the smaller market. Insofar as our pipeline goes for the year ahead, we have a number of very promising potential listings, which are in the public domain. We also have a pipeline that is obviously not in the public domain. Companies like Southern Palladium, which will be an inward listing from ASX, is very pleasing. Coca-Cola Bottling Company has been repeated. SwiftNet from Telkom, Premier Foods, African Bank, the Outsurance unbundling, and then potentially Fidelity, which is in the informal market. What we're particularly pleased about is Zenith Energy, which is a fast track listing. We discussed our strategy to try and introduce as many fast track agreements with peer exchanges. And this is the first proof point that those activities and actions are starting to bear fruit. So just to reiterate what Nku said, this is a broader macroeconomic dynamic we're facing into. There are areas within the exchange's control. We have already acted on a number of areas relating to red tape. We continue to make strides in that space, and we're also looking to open up new avenues of capital formation to enable the growth nodes in the economy.
Thanks, Leila. Chris, if we could move on, if you have follow-on questions to that, perhaps you could keep that to the open Q&A time. I believe we don't also have written questions on any of the AGM resolutions, and therefore I'm going to turn our attention now to the next agenda item, which is the presentation voting on the AGM resolutions, with gratitude for Chris for opening up the conversation. I will present the various AGM resolutions as contained in the notice of meeting. These will be displayed on the screen one by one for your information. Our resolutions deal with ordinary and special business and include the required advisory resolutions relating to remuneration policy and implementation. Please note that in terms of the JSE's MOI, resolutions at this meeting will be voted by means of an electronic poll rather than by a show of hands. Voting is open already, so if you are anxious to submit your vote, you may go ahead. Please click on the Vote Now link on your secure link, and it will direct you to the voting platform. Please remember that the platform reflects all votes automatically defaulted to for. Please select for, against, or abstain for each resolution. Check your selections carefully as they cannot be retracted or re-voted once submitted. Once you've made your selection for each resolution, please scroll down to the bottom of the page and click Submit. A message will pop up on your screen confirming that your votes have been received. The following ordinary resolutions require the support of a simple majority in order to be adopted. Ordinary resolution number 1. In terms of our MOI, a newly appointed director must stand for election at the first AGM after their appointment by the board. Phuthuma Nhleko joined the board as a non-executive director on 1 July 2021. Accordingly, he is standing for election for the first time by shareholders. I have already introduced Phuthuma to the meeting, and a brief biography is contained in the notice of meeting. I propose that Phuthuma Nhleko be elected as director with immediate effect. Ordinary resolution number 2. Directors serve 3-year terms and retire by rotation in accordance with the provisions of our MOI. Directors that are eligible stand for re-election by shareholders. Our nominations committee has considered these proposed re-elections and has recommended that Suresh, Faith, Zarina, and Ben be re-elected as directors. I therefore propose that the following directors be reappointed with immediate effect for a further term, noting that each of these 4 re-elections is by means of a separate vote. 2.1, referring to Suresh Khanna, our lead independent non-executive director. 2.2, Faith Kanyile, independent non-executive director. 2.3, Zarina Basa, independent non-executive director. And lastly, 2.4, Ben Kruger, independent non-executive director. A brief biography for each of these directors is contained in the notice of meeting, as I already noted. Moving on to ordinary resolution number 3, as mentioned earlier in the meeting, our tenure policy allows a non-executive director to serve for a maximum of 12 years. However, after 9 years, each further 1-year term must be approved by shareholders at the AGM up to the 12-year limit. Mansika Matwane has served for 9 years on the board of the JSE, having first been elected at the AGM in 2013. She remains independent in character and judgment, and the board is pleased to recommend her for reappointment for a 1-year term. Her biography is set out in the notice of meeting. I propose that Mansika be re-elected as a director for the ensuing year with immediate effect. Ordinary resolution number 4. Ernst & Young serve as the independent auditors of the group and are due for reappointment by shareholders. I propose as ordinary resolution number 4 that Ernst & Young Incorporated be reappointed with immediate effect as the independent registered auditor of the group for the ensuing financial year or until the next AGM, whichever is later. I further propose that Mr. Imran Akuri be appointed with immediate effect as a designated auditor for the ensuing year until the next AGM, whichever is later. On resolution number 5, in terms of the Companies Act and the JSE's MOI, the JSE board is proposing 3 independent non-executive members of the board for re-election as members of the Group Audit Committee. The Group Audit Committee serves as the audit committee for the JSE Limited and all group entities. Brief curricula vitae of these directors are reflected in the AGM notice, and each appointment is by way of a separate vote. I propose on resolution 5.1 the reappointment of Suresh Khanna as member and chairman of the Group Audit Committee. I propose as on resolution number 5.2, the reappointment of Faith Kanyile as a member of the Group Audit Committee. I propose as on resolution number 5.3, the reappointment of Zarina Basa as a member of the Group Audit Committee. And finally, on the ordinary resolution side, on resolution number 6, I propose the authorization of any director or the group company secretary to implement these resolutions. We now move on to the non-binding advisory resolutions, which require the support of a simple majority in order to be adopted. These two resolutions enable shareholders to express their views on the remuneration policy of the group and on its implementation. While these resolutions are of an advisory nature only, the board will take the outcome of the vote into consideration when considering any amendments to the JSE remuneration policy. Advisory resolution number 1, I propose that shareholders endorse the remuneration policies of the JSE as set out in the remuneration report. Advisory resolution number 2, I propose that shareholders endorse the remuneration implementation report of the JSE as set out in the remuneration report. We have 4 special resolutions proposed for shareholder approval today, which require the support of at least 75% of the total number of votes present in order to be adopted. Special resolution number 1, the reason for this resolution is to authorize the company by way of a general authority to acquire the company's issued shares on such terms, conditions, and in such amounts as determined from time to time by the directors. The directors currently have no specific intention to act in terms of this authority to be granted by the passing of special resolution 1, but will continually review the company's position in considering whether to effect any repurchases. I propose as special resolution number 1, the general authority to acquire the company's issued shares in accordance with the provisions of the Companies Act 2008, the JSE listings requirement, and the JSE MOI. Special resolution number 2 authorizes the company to provide financial assistance only to group entities for the purpose of facilitating normal day-to-day commercial and financing operations among group companies. This resolution specifically excludes any financial assistance to directors and officers. I propose, therefore, special resolution number 2, the authority to provide financial assistance to group entities in accordance with the provisions of the Companies Act. Special resolution number 3 authorizes the company to provide financial assistance only for the purposes of administering the group's long-term share incentive scheme in accordance with the provisions of the Companies Act. I propose a special resolution number 3, the authority to provide financial assistance to directors and officers in connection with the administration of the JSE's LTIS 2018 share scheme in accordance with the provisions of the Companies Act. Special resolution number 4 authorizes the payment of emoluments to non-executive directors of the JSE for their services as directors. Our policy provides that emoluments should be benchmarked against a relevant peer group of companies. Our group REMCO reviewed independent benchmark analysis in determining the proposals set out in this special resolution number 4. This independent benchmarking exercise indicates that emoluments for 2022 ought to be increased by approximately 5.8% on average, which will bring the emoluments payable to the JSE's non-execs to approximately 90% of the median of the peer group of companies. I propose a special resolution number 4, the authority to pay emoluments to directors in accordance with the schedule set out in the notice of meeting and the provisions of the Companies Act. I confirm that all AGM resolutions have now been put to shareholders and invite you to submit your votes via the online voting platform if you haven't done so already. We'll pause briefly at this point until our scrutineers confirm that all shareholders currently reflected on the voting platform have submitted their votes.
Madam Chair, just to deviate slightly, I notice Mr. Logan has once again raised a hand. I'm not sure if you'd like to consider his comment before we close the voting.
I'm afraid not, Chris. Can we hold the question to the open Q&A unless you confirm to me that it has a material impact on the vote? Chris, can you unmute his mic, please?
Hello. Yes, can you hear me? Thanks.
Yes, I can hear you. Is this a general question or is this relating to a resolution that's just been put to the vote?
It's on your remuneration resolutions.
Okay, please go.
Thanks. If you look on your remuneration report, page 19, the JSE has a minimum shareholding requirement. It's basically that your CEO has 1.5 times total guaranteed pay and your prescribed officers 80%. And if you look on your annual financial statements, you'll see shareholding is pretty low throughout the JSE. Now, if you do a comparative analysis amongst your peers, these levels look hopelessly low. It actually looks as if you place no value on alignment or ownership. And I'll give you some examples. NASDAQ, their CEO has 6 times base salary. That's 4 times higher. I'm working on a proviso that base salary and TGP equate. But their CEO also owns 744,000 shares. The LSE, 4 times. And there's a far more widespread requirement for shareholding amongst the executive. And then, as you'll know, in the case of a successful company like Anglo's, which has managed to turn itself around, share ownership and alignment has been a big feature. They recently even came with a share ownership scheme for the broader workforce. And Mark Kutafani walked out of Anglo's with 25 times his base salary in shares, with their requirement being 4 times. And there's also a requirement there that he holds the requirement for 2 years post-leaving. Why is this important? You know, whichever way you look at it, the JSE has been in structural decline for the last 5 years. Whether it's listings, returns, you name it. And it's very hard to see a dramatic turnaround occurring unless your executives have got serious skin in the game. So it's a concern for me that you seem to be dramatically underplaying the necessity of alignment and ownership. Perhaps you want to respond.
I do indeed, Chris. Look, you raised some very valid points and ones that have exercised our remuneration committee quite a bit. In fact, we did slightly reduce our MSR targets over the last year in light of the very unique circumstances that JSE Exco finds itself today. When we introduced minimum shareholding as part of our compensation structure, we had an Exco that had been in the JSE for some time and therefore had multiple cycles of share allocations and vesting, and so could bring that into a fairly sizable shareholder holding right at the start. However, when you get a new CEO, a new COO, quite a lot of our Exco being new, they start from 0 on the day they're appointed. And I want to remind you that Leila has been with the JSE for less than 3 years. So the thinking was to align the MSR to the share allocation per annum as a starting position. So as she gets, for example, in the case of the CEO, a maximum of 150% of base pay as a share allocation, it seemed to make sense to start off at 150% as well on MSR. I would say to you, this is a starting position, and if you haven't seen that trend upwards over time, we would not be achieving that which we set out to do. But essentially, we want a scheme that A, is achievable and does not require our staff to divert actual cash from other needs in their lives to doing this, where we give them the opportunity of building up the MSR through the allocations in the share scheme as they vest. So that is the thinking behind it, but that we would have a desire maybe not to go to 6 times, which is really, really high, but to be at least within the ballpark of our peer exchanges is certainly an aspirational desire on our part. So not to duck your question at all, but at this time, we see this as the best case scenario and the most achievable given our circumstances. And I wouldn't, knock 150% as not skin in the game to some people that could very well be. So we also just need to be mindful of where people are in their lives and the need out there. Some of our staff support multiple family members, etc. And so we had to take a lot of human factors into account in deciding on this position. But keep raising this every year, and I'm sure you will. Okay.
Yeah. Hello.
I'm listening.
Yes, but your minimum shareholding requirements normally a requirement to be met after 5 years. So it's extremely low. And whether you like it or not, you're competing with the likes of NASDAQ and the London Stock Exchange. Companies aspire to go there, and they're even leaving South Africa to go there. To give no cognizance to that, I think it's extremely short-sighted. And 6 times isn't high. The norm for S&P 500 companies is 6 times. I can send you a Harvard paper on that. And perhaps you need to think more laterally. If Layla manages to turn the JSE around, and in 5 years' time, we're sitting with a share price double or treble, it's only right that she does very well, just like Mr. Mark Kutafani did, as you know. And so doesn't the JSE need to be a bit more innovative and generous and come off this terribly low level? Because we are stuck in a downturn with this company. Even your turnovers, it's been flat for basically a 5-year period. I don't want to go into detail, but I strongly think this sticks out like a sore thumb, and it doesn't inspire confidence.
So, Chris, as I said before, we take a multiplicity of factors into account, and not just the S&P and NASDAQ into account. We certainly look to those developed market exchanges for sure, but we do also look at closer to home to see that we are there or thereabouts within what financial sector is doing here in South Africa. So certainly NASDAQ, etc., are data points that we take account of, but in your analysis, it does not appear that South African factors are taken into account at all, but perhaps I'm wrong, you just didn't mention it. So we do look at our neighborhood as well in devising an appropriate structure. That's the first thing. Correct, well, correct in that. Yes, go ahead.
Sorry, in terms of South African factors, I can quote you other examples. Dynamic companies, Capitex 3 times, First Rand 3 times. So that's double where you are at.
Correct. So that would be for us, I think, a short-term aspirational level would be much more in that range than 6 times was the one point I was trying to put across. Look, Chris, we could debate this up and down. As I said right at the start, you raise a very valid point, one that is actually difficult in the real world to be pragmatically applied rather than formulaic in its assessment. So this is just one way your board exercised discretion and decided this was the right place to start, by no means to end, number one. Number two, I do need to remind you that the JSE doesn't fund MSR by in any means. I mean, I have not had one single shareholder in 12 years tell me that we should pay more generously, so thank you for that. But in terms of MSR, it is the staff member themselves that are funded, and we do give each executive a certain runway to build up that MSR, and if it doesn't happen, clearly the board or remuneration, through the remuneration committee, would need to address that. But taken on board, and I'm sure that remuneration committee will deliberate on your input at its next consideration of this item. I'm going to ask us to move along now to address the vote and the vote counting.
Thank you, Madam Chair. As shareholders, we will now be closing the voting platform. So kindly, if you have not already done so, submit your vote, and we will show results in the next 10 seconds or so, Madam Chair.
Thank you. I confirm that all AGM resolutions have been put to shareholders in the results of the voting are now displayed on your screen, and I hereby confirm to the meeting that all resolutions have been carried by the requisite majorities, and we thank you for your support. In terms of the JSE listings requirements, section 3.91, detailed results of this meeting will be disclosed on SENS within 2 business days. We now move on to agenda item number 5, and Leila will provide a brief update on the business, and then thereafter take questions as part of an open Q&A.
Excellent. Thank you very much, Chair, and good afternoon to everybody. I'm really very pleased to be able to engage you again at this annual general meeting. But before I get to the Q&A section, I would like to acknowledge our chairperson, Nonkululeko Nyembezi. As you all know, the JSE's governance policy stipulates that independent directors may serve for no more than 12 years. And so, as we all know, Nku will be passing the baton this evening to Phuthuma, who takes up office. We are very pleased that we've had Phuthuma on board for 6 months, more than 6 months, and that we will have a seamless handover between the chairs. And we're equally grateful to Nku for everything that she's done. She's left an impressive legacy. She's strengthened the organization tremendously over the last 12 years. And I personally, and I know I speak for the organization, have been privileged to learn from her leadership, and we feel honored to have had her wise counsel and loyal support, particularly for me during my time as the CEO of the JSE. So on behalf of all of us here today in Nku, we'd like to thank you for your service, and thank you for all you've done as you execute your final duties as chair. I'd also like to take the opportunity to warmly welcome Phuthuma Nhleko. We are very grateful to have someone with Phuthuma's stature, background and experience, and we genuinely look forward to working with him. I've been working closely with him in the run-up to the handover, and Nku has enabled a very, very smooth transition. I'd like to now just offer a couple of general remarks about the business before we go into general Q&A. And firstly, the JSE is very much a principal hub of the South African markets capital landscape. And for over 130 years, the exchange has fulfilled its duties to public markets, which is a home for investment and a platform for companies to grow, and also a gateway for top South African corporates to access the world. The axis of investing has unreservedly shifted, as you would have read in my Sunday Times article. And since the days of early trading, we've seen tremendous change, and the exchange has certainly moved with it. In 2021, we performed very well under challenging macroeconomic environment, and our financial performance was driven by a cash generative business model, as well as contained cost growth of 4%, which allowed us to maintain a solid yield for our shareholders. Market availability and uptime was in excess of 99.8%. And exceeded service level agreements of more than a decade. We are very proud to have taken considerable steps towards improving our ESG practices by launching our ESG disclosure note. And it also goes without saying that technology was a very central and focal point in all of our activities. During the past year, we completed our migration of the BDA system, and this is really an example of targeted improvements that we continue to apply to ensure resilience and to, of course, mitigate disruptive events. So as we approach the half-year mark, we are making steady and systematic progress towards another year of delivery. From a strategic perspective, as many of you will be familiar with our current strategy, we have prioritized inorganic growth. And our strategic investment into the fintech of Globacap has led to opportunities to collaborate on new initiatives. JSE Investor Services, or JIS as it's known, which includes our investment into Link Market Services and the Investor Share Plan Services acquisitions, contributed to 5% of 2021 revenues in its full year, and we anticipate and we watch it as it continues to grow, and we will continue to improve the JIS business to ensure that it continues to contribute to a positive bottom line. Last year, I spoke about our voyage into alternative markets, and a year later, I'm incredibly pleased to say that our private placement platform has launched. It's attracted so far more than 5 billion in investor funding, and is ready to be deployed in the infrastructure space. Earlier this year, we welcomed our first deal, which is a project that will develop a state-of-the-art private hospital, complete with neonatal and maternity wing on the Messina border between South Africa and Zimbabwe and Botswana. We also launched 2 additional programs to build out this ecosystem. Firstly, an incubator of incubators, which was aimed at smaller startups. We've been engaging extensively in the city of Cape Town to establish that, and we have we're finalizing funding from some of the large corporates, and we're also busy with the JSE Enterprise Acceleration Program, and that is aimed at more established scale-up companies. So this is a very exciting time of growth for the exchange, and it complements our objectives, which are to run trusted and effective markets and to contribute positively to economic growth and deliver quality and sustainable markets. So from a markets perspective, while our businesses grow, the core trading, clearing and settlement business remains the primary driver, and our markets recorded very strong performance globally, and our equity markets tracked this performance. Our billable ADV is up 13% year to date as at the end of March and 12% at the end of February. And in the month of March, I was really pleased to see that the JSE recorded an impressive 49 billion in our average daily value traded for that month. This is a record month, the best month that we have in the history of the JSE, and that includes beating the first month of COVID, where we recorded 44 billion on average, and during August of last year, where we recorded 48 billion after the corporate action. So we are very pleased with how we've responded to the Russia crisis. Once again, showing our resilience, and the South African markets are continuing to grow. We have seen, in addition to that, a turnaround in our net foreign flows in the equity market. We saw 18 billion net inflows as at the end of April, and this represents a reversal of a 3-year systematic trend of outflows in the equity market. The FTSE All-Share Index ended up 24% at the end of 2021, and that was supported by a rebound in all of our major sectors. While the first quarter of 2021 has seen further event-driven market activity, pricing pressure on major industrial counters has kept our indices somewhat subdued. And at the end of April, the all-share index was down 1.7% for the year, compared to the S&P 500, which was down 13.3%, and the FTSE 100 index, which was up 2.2%. I have spoken to you about listings, and as an exchange, we are focused on the factors that we can influence to promote listings. For example, as I mentioned, promoting the country as an attractive destination, reviewing listings requirements, and spotlighting quality small cap counters. We have also responded to changes around us, as I mentioned, introducing new mechanisms for capital raising, such as the sustainability segment or private markets. So in concluding, I just wanted to say that the nature of business demands agility and responsiveness. And in turn, the environment in which we operate influences our opportunities and our constraints. Looking ahead, the JSE remains highly capitalized, well-regulated, and cost-effective, and we have deep and liquid markets which are based on a technology that is robust and resilient. I am very confident that the JSE is able to deliver sustainable long-term value for our clients, our employees, our shareholders, and the broader economy. And with that, I'm going to open the floor to questions. Please raise your hands to speak, or pop a question in the chat box.
Thank you, Leila. And we are now open for broader general questions from the audience.
Madam Chair, we did have some questions sent in from Mr. Paul Miller, so the questions are displayed on your screen.
All right, but you're going to read it out loud, or
Certainly.
Leave it on the screen?
Certainly, Madam Chair, I'll read it out. The shareholders can view it as well. So the first question is, the JSE has fewer mining companies listed today than it has had at any other time in its history. From its very inception, in that tent in the mining camp in 1887. This has previously been explained away by the JSE as a consequence of an unfavorable South African mining regulatory environment. Has the JSE been able to communicate its concerns to the Department of Mineral Resources and Energy or any other part of government? And if so, what has the reaction been? Madam Chair, would you like me to read all 4 questions? And
just the first 2, so we can group them here.
Certainly. The second question is as follows. The Department of Mineral Resources and Energy, the Council for Geoscience, and the Minerals Council has jointly worked on a new exploration strategy for SA's mining industry. After almost 3 years of work on the strategy, the document was recently gazetted by Minister Mantashe. It appears that the objective of the strategy is to take SA from below 1% of global exploration investment to at least 5%. This has been alternatively reported as being 8 billion rand or 13 billion rand in capital investment in mineral exploration annually. This is a significant amount of capital to mobilize annually, and one would imagine there would be an expectation that public markets would, at least in part, be used for the purpose. What role, if any, did the JSE play in the development of the strategy, and was the JSE specifically consulted on it at all?
Okay, so if I could just start on this and then hand over to Leila. clearly sectors that are outside of financial services engage with the aligned ministers in trying to get policy shifted in a positive direction. And any watcher of the minerals space would know that the Minerals Council, together with BUSA, BLSA, have been banging the drum on policy change, policy certainty in this area for many, many years. And given the sheer size of some of our mining companies, they've also been taking that message directly, not just to the Minister of Mineral Resources and Energy, but also to the President and to various cabinet ministers. And I personally have participated in many meetings where these matters were being debated, not necessarily under a JSE hat, but under the broader organized business. Because actually, to be fair, this is a matter for SA Inc. JSE can only play a role in that. But when you have such big, complex, and difficult shifts to get government to make, it simply wouldn't work for one organization to do it. So the main point to take away is that this has a huge amount of attention and drive from a multiplicity of stakeholders who care deeply about this particular issue. So if I could hand over to you, Leila, to talk about the JSE specific contribution to this.
Thank you for that, Chair. And really all I would add to that on both of these questions is certainly we lean in and support, and our primary engagement with government over the recent past in the mining sector has been to support the Minerals Council on their proposal for tax flow through shares. And this will effectively give a tax deduction on exploration expenditure. We expect that would flow through and encourage exploration and funding and potentially new listings for junior explorers. So the Minerals Council, with the assistance from Paskin, has submitted their proposal to National Treasury, and they're awaiting further engagement with the Treasury.
And you asked what the reaction has been. I think the frustration for this particular minister is that by the time he arrived in that seat, there were many processes in train, such as the court challenge to some of that regulatory aspects, and the whole thing with the geosciences was also in train. And so he picked this up and tried to speed it up and overpromised. And so we are at a point now where, while the reaction is yes, 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 we need to do these things, we've seen rather less progress on the ground, actually, particularly on the exploration platform, which has been disappointing, but it's not something that we can walk away from as SA business. I think this is something that's absolutely critical for the country.
Thank you, Chair. The next two questions. What is the JSE's view on the very low level of participation of retail direct investors in our local market, in particular relative to resource-rich mining markets like Canada and Australia, especially when juxtapositioned relative to the explosion of local retail interest in trading platforms for things like cryptocurrencies and FX? For example, Luno, a single crypto trading platform, claims 5 times greater, 2.2 million, the number of individual South African participants in the JSE has individual BDA accounts, approximately 452,000, across all its authorized stockbrokers. Has the JSE done any root cause analysis to understand why this obvious direct retail interest in trading, and digital trading in particular, has not been directed to the JSE? And finally, what is the JSE's general public engagement strategy to try and improve the policy and regulatory environment, and thus the role and effectiveness of the public market as a place for new and growing companies to raise primary capital? Has your strategy been effective?
Leila, do you want to take as much of that as you're able to answer?
Very, very happy to, Chair. Thank you for that. Thanks for that question, Paul. So certainly the retail market is a very important market for us, and it's important firstly because it's growing globally, and secondly with the rise and growth in the emerging middle class in South Africa, and the obvious rapid increase in markets like crypto. There are 3 areas that we are focusing on, and we have brought in our Chief Operating Officer deliberately from a retail environment, with retail repackaged knowledge to apply to this. We've set up a advisory committee with our market participants, and we're working towards 3 key areas. Firstly, access. Secondly, pricing. And thirdly, financial and investor education. We are looking at various technological options where we would collaborate and work with our market participants to enable freer and easier access to information. We are looking to build out educational programs, and we are also looking at whether there are ways that we can address pricing for the retail market. There are some systems constraints, and we're working through that. In addition, we have commissioned countrywide research into the psychographic behavior that is affecting the man on the ground in South Africa in their savings and investment profile. So indeed, this is a topic that has taken a fair amount of our expo and my time. And it's something that we are working very closely with our market on. And we would like to see in the next year or 18 months that we make demonstrable strides in the same way that we have in our SME market investigations.
Right. Do we have any other questions from the floor?
I think there's just one more question about policy and regulatory environment. I don't know if we need to read it out. I think everybody, it's quite a straightforward question. Asaf, do you?
I think I did answer that to some degree. I mean, the JSE is a member of Business Leadership South Africa, which in turn is an affiliate of Business Unity South Africa. And so through participating in that, in fact, Leila serves on the board as a director, I chair BLSA. And so to bring our voice together with other leading South African corporates, I think magnifies the weight with which we can take some of these policy and regulatory proposals to government. Been successful in places and not in others. I already talked about, for example, the glacial pace at which we've seen action on the mining side. But for example, if I cite the own generation cap being raised last year, that was just business pushing and pushing for it. Admittedly, we got a lot more than we had asked for in that at that point we're still talking about 10 megawatts and the president gave us 100. So that was actually quite an important, I think, a break for us given our electricity environment in South Africa. We are now actively working to get the regulatory process side of that equation to be implemented so that people can get on with their projects. And there's quite a few waiting in the wings, awaiting NERSA to finalize the licensing process. So that was one, I think, where there has been outright success. I think that if you think about spectrum, that was long, hard fought for 4 years to get 5G spectrum auctioned so that mobile operators can extend services. It finally got done this year, albeit there's still some cleanup action to be done, but a successful auction in March. Again, quite an important element of the rigidities that we've been fighting to unlock in order to accelerate growth in South Africa. There is a whole raft of areas where even if at this point I can't give you a tick, we can see that there's progress being made. We are very focused, for example, on crowding in private sector capital into infrastructure development in South Africa. And the thrust there is to have Treasury amend the PPP framework, because what we have now as a framework for public-private partnerships just isn't working for the private sector. We've given them distinct, actionable proposals for them to consider. They are busy implementing some sort of legislative process to get that amended. And so I'm quite optimistic that we'll get something through there. So you're not going to read about that very often in the newspapers, but there is real work being done by the JSE alongside its peers to try and get things moving so that we've got the right environment in which capital can be deployed in the country.
Thank you, Madam Chair. We do have a raised hand from Robin Hugo. Shareholder, please proceed.
Good afternoon, Chair. Good afternoon. Robin Hugo from Shareholder Just Share. Up front, we want to congratulate the JSE for its sustainability and climate disclosure guidance documents that were published for comment in December. Although Just Share's preference would be for these documents to be mandatory, they represent significant progress by the JSE. This distillation and localization of the recommendations of multiple global initiatives has clearly involved a significant amount of work. And this will provide some really much needed guidance for consistent, comparable, transparent, and reliable disclosures. So we commend you for this important work and look forward to the final version of these documents being released soon. Then I'd like to ask you about gender pay gap disclosure. Your sustainability report states that the JSE has conducted extensive desktop reviews and interviews to understand the practices in other countries to close the gender pay gap. In South Africa, as you know, there's no requirement for disclosure of the gender pay gap, not even in the proposed Companies Amendment Bill, which envisages mandatory wage gap disclosures. Surely the first step towards closing the gender pay gap is requiring its disclosure so that we can understand the extent and nature of this gap. And as such, would the JSE consider including a requirement for disclosure of gender pay gaps in its next review of the listings requirements? Thank you.
Thank you, Robin, and for your warm words of encouragement. You obviously challenged us quite a bit last year, and I think the year before, and just to say we do listen and go away to think about some of the inputs that we receive at meetings such as this one. Not done yet, so still some way to go. I think we are doing some work on the gender pay gap. Our regulatory team is busy with that. But I do just want to always caution, and I always caution the team here, that to pile on more and more and more disclosure requirements on listed companies that are not also mirrored across the fence on the unlisted sector could play quite negatively on our drive to push companies to list, or at least attract them to list. So there's always a fine balance between what is commercially palatable to firms and what we desire to see. And certainly if you just see the makeup of the top team in the organization, you would understand that this is a matter that is very close to our hearts. With that said, I think it is something that we need to make a move on in whatever way. First prize will be to see that in legislation so that all companies in South Africa have to do it. Those at least that have got a public interest score that requires them to be audited. Second prize is, oh, well, then if we don't get that, what is the JSE going to do about that? Please watch this space. We are in a sort of continual consultation process about all of these areas that we're investigating. So something will come out on that, which hopefully you will get to comment on.
Thank you, Madam Chair. We have a few raised hands. Mr. Logan was first. Mr. Logan, if you could proceed.
Yes, thanks a lot. Just picking up again on the listings performance, I think, if I can just be frank, I think, you're being a bit casual about this. We're in 7 years now of net delistings. London, for instance, which had a problem, turned around their performance last year. They had their strongest listings year since 2007. And only 39% of that new capital raised was tech and consumer internet. So it's not purely tech that's driving these new listings globally. But London takes things seriously. For instance, they had 2 commissions which looked how they could improve things. Given our dreadful listings performance and the escalating pace of delisting, I mean, there's something like 25 delistings which one can already identify this year. Isn't it time for the JSE to use its convening power to call for the establishment of an independent assessment as to what's wrong in SA, because you've touched on things like macroeconomic factors, and how they can be fixed? An authoritative study, because, you know, each day we hear different things, and isn't that the professional way to do it? A proper diagnostic by a competent and independent body or person. Thanks.
Thank you, Chris, and thank you for your suggestion. That's certainly something that we can look to incorporate in how we deal with this. It's just South Africa is a country with so many needs. You just join the queue because everybody wants their stuff looked at, but an independent assessment is not something that we've considered before. And it's certainly something we can take up. So I think I know the study you're talking about in the UK. In fact, that's when we're looking at that. So I think that's when they started to reconsider the dual class shares as well, which they had disallowed and now turned around and done something different. But thank you for that suggestion. I do, though, just want to tell you that it is not the case at all that we take a casual attitude to this by any means. You examine, for instance, the agendas of sequential SRO Oversight Committee meetings, and this is always on the agenda. We had a special workshop this year to just knock ideas around to see what is it that we can do from a JSE perspective. So definitely no sign of casual around that topic. Could we have the next one, please? Actually, the next 2, easy.
Thank you, Madam Chair. We have Emma Schuster. Please go ahead, and thereafter Nomfundo Mdluli. Ms. Schuster, please go ahead.
Thank you very much and good afternoon. My name is Emma. I'm from Just Share. I have 2 questions. We've seen a growing trend in listed companies stating in their disclosures that non-executive directors have sustainability-related competence, but without providing any evidence of why this is the case. In some instances, long-standing directors whose skills and competencies have never been sustainability-related are suddenly assigned this expertise. We note that 4 of the JSE's board members have sustainability as a key strength. So can the chair just elaborate, please, on how the JSE defines this competence? My second question, I'd like to ask about the publication of AGM minutes. One of the recommended practices under Principle 16 of King 4 is that the minutes of the AGM of a listed company are made publicly available. However, many issuers do not provide their minutes publicly, or if they do, they often don't include minutes of the Q&A session. We see that JSE has published its minutes from last year's AGM for the first time, so thank you for that. Although they don't include the minutes of the Q&A session, during which there were a number of important issues raised by shareholders. Will the JSE consider including minutes of the Q&A section for this AGM when you publish the minutes? And will it consider providing a recommendation that all its issuers comply with this very important practice? Thank you.
Okay, let's Just Share. Then we go to Nomfundo.
Good afternoon, Chair. My name is Nomfundo Mhuli from Just Share. As you know, Just Share has engaged with the JSE on a number of occasions in relation to the listings requirement relating to policies on board race and gender diversity. Last year, you said that targets are voluntary, but the fact that only 28% of boards are represented by females needs to change. There has been a small increase from 28 to 32% in female representation on boards since the last AGM, but the pace is still far too slow. My question is, how is the JSE using its position and influence on gender equality practices to further advance gender diversity at leadership level in companies listed on this exchange, especially in circumstances where the 30% club's research shows that more than half of listed companies have not set or disclosed any targets on race and gender diversity at board level at all? Thank you.
Okay, let's start with the first question. So we did actually publish the full video of the AGM of 2021 on our website, and therefore any person, shareholder or otherwise, who had an interest could go back to view that video. If you would please just check and confirm that what I'm telling you now is accurate. We do publish the minutes, as you noted, but we then publish the entire the video of the entire proceedings for information. On the issue of sustainability, I am going to invite our group sustainability committee chair, Suresh Khanna, to comment on this. But just to say, we don't publish for any of the skills and competencies of the board. We don't have a bespoke JSE framework against which we rate those. But of course, when directors are first invited to come on the board, they do provide detailed CVs from which we glean information. But to speak about the sustainability knowledge base in our board, of which actually I'm very proud, may I ask Suresh to comment, please?
Yes, thank you, Madam Chair. I suppose you have to get down to individuals as you indicate. What are the skills and how do we get to to label or designate people with sustainability skills? Just as an example, I serve as a trustee of the IFRS Foundation, which is based in London, and as you may be aware that the ISSB has been formed. And I'm close to that, and that's where all the sustainability disclosures are being dealt with, the climate change disclosures, and the frameworks that are in that regard. Also, one of my fellow members on the committee, Siobhan Cleary, has considerable experience in this space, working in the fund management space, as well as a historical involvement with the World Federation of Exchanges, where sustainability matters were discussed. Also, when you think about some of the other members of the committee, they all have, on various boards where they serve in that capacity of looking after corporate social investment, as well as other sustainability matters. It is when we look at the nominations committee and the skills of various people, that is kind of a key area to look at, because sustainability and particularly climate change is a defining issue for everyone at the moment, for corporates as well as society.
Thank you, Suresh. Moving on to Nomfundo's question. Our philosophy, Nomfundo, has always been that it is investors that must hold the companies in which they invest to a standard that they expect as investors. Our role is merely to make certain that companies disclose and make a full disclosure at that. And to the extent that the investor base wants to see more diversity, they're going to drive that in their engagements with the companies in which they invest. We've seen this very, very clearly in the ESG advance, particularly on climate change, which has definitely been driven by investors wanting to make certain that the companies they invest in understand the risks under which they operate, and they're doing something about it, and indeed what they're doing about it. This, I think, is, and it has always been, the way that JSE has engaged with its issuers. I mean, if you think about it, there is no way that the JSE is going to be able to go around telling the top 40 companies what to do if investors are not pushing that. So I think the one that we are absolutely responsible for is to make certain that there's public disclosure, there's transparency about all matters to do with gender diversity, and indeed all of the other diversity metrics that we care about at the moment. And to the extent that we're not fulfilling that mandate, I think you are very welcome to help us see where we could tighten it.
Madam Chair, at this time, there are no more raised hands and also no written questions.
Thank you very much, Izzy. This brings us to the conclusion of this AGM. I trust it has been a meaningful opportunity for you to engage with the board and executives, albeit in a virtual format, and that your voice as shareholders of this group has been heard. We adopted this virtual format in 2020 in response to the pandemic, and I suppose all other listed companies did the same. Continued this year in the interests of, as I said earlier, reaching as wide a shareholder audience as possible. Clearly, it appears that the pandemic is waning, helped in no small measure by an increasing level of vaccination, which is making a difference. So hopefully, in the forthcoming period, it may be possible to resume in-person meetings, as I said, the pandemic allowing. As I take my leave of the JSE, I am struck by the resilience of our corporates and the ingenuity of our people in South Africa. I am cautiously optimistic about the future of our country, and will watch with great interest the progress of the JSE as Putuma and Leila, supported by the board and EXO, chart its next moves. It's been my pleasure and honor to have served the JSE the past 12 years, and to have chaired this great institution since 2014. I will miss the engaging debates and the collegiality of my fellow board members. Very, very grateful for their support, wise counsel, and unwavering commitment over the years. I now declare this meeting of shareholders closed. Thank you all for attending.